Welcome back to My KC Live. Jonathon McCoy with Market Advisory Group is back on the couch today. All right, so we got to talk about it. President Trump is going to be sworn into office Monday, January 20th, and there's going to be a lot of eyes on the economy. So today we kind of wanted to talk about how the new administration is likely going to kind of impact things. So let's kind of start with maybe tax cuts. What should people be prepared for?
Yeah, I don't know that we're going to see much in the way of tax cuts for individuals. You might see a little bit more of a tax reduction on the corporate and industrial side of the economy. Ultimately, we don't know. We've got about a year between now and when the new tax code is going to go into effect in 2026. So in that very short window of time, Congress typically does not act quickly enough to get a full-blown new tax code written together. So we do expect significant changes to the tax code. I don't expect tax rates to go up, as we maybe had previously been a bit concerned about. And some of the discussion, you know, politically around tariffs and international trade and what stance does this leave the U.S. in terms of the global economy. Ultimately, the bottom line is the numbers are the same. Regardless of who is going to win the election or who is going to be in charge on Capitol Hill this year for the next 4 years, we've got a massive debt problem as a country, and we have to be generating more revenue to the federal government to cover current spending. But I think a big focus of the new administration can and should be to limit spending as much as possible. You know, keeping those important benefit areas of government assistance for individuals that are in need. But I do think we'll start to see sort of a morph into people that maybe don't need as much of the government program financial funding, whether it be, I hesitate to say Social Security benefits, because then I get phone calls from people saying, what do you mean they're taking away my Social Security?
You're like, no, that's not what I mean.
That's not what we're talking about here. Ultimately, there is a means test that's already in place with the tax code that the more money you make in retirement, the less of your Social Security you're going to keep after taxes. That we could see an extension of some of those rules, where if you're making 6 figures income throughout your retirement years, it's going to be more and more difficult to keep as much of your money as what you thought you maybe had when you retired. And a lot of that may have to do with the increasing tax rates over the next 5 to 10 years, not just the next 4 years.
All right. Well, we also kind of need to talk about it because I feel like it's been a talking point. At least I've seen, you know, articles and things like that on Facebook and all over. But we got to talk about the tariffs. What is this going to mean for people?
Well, you know, some of this is there's a little bit of a political sort of boxing match happening right now, where, you know, there have been some sort of, regardless of how you look at it, a little bit of an unfair trade practice both between the U.S. and other countries and vice versa. So I think this is sort of a review of what a lot of those international economic relations look like for the United States. And a lot of people, I've had questions from clients, you know, what about this BRICS and, you know, some of the other currency things that are happening, you know, is the U.S. dollar going to lose its stance as the world leader in currency? Really what we have to look at is what's most important, which is the U.S. outspending its means, which when we talk about this on an individual basis, live within our means, pay off our debt, save an emergency fund. We talked about this last week. As a country, really the rules remain basically the same, as we cannot be consistently spending $1 trillion more every 100 days than what the country is bringing in. But, you know, I think a little bit more of a business-like approach to running the government is helpful. But, you know, we saw some pros and cons under the original Trump administration 4 years ago, where spending really was not curtailed by much. I think they're starting to begin that question of people wondering, will our country ever get its spending under control? Has inflation, you know, gotten too high? Has our interest rate gotten too high? Ultimately, you have to have some belief that, you know, good, thoughtful people are going to be in charge to put some better policies in place. And tariffs are another way to generate revenue for the government, but they're not the be-all, end-all, and they're definitely not going to be a one-stop fix.
Well, thank you again for just taking the time to chat with us about all of these things, because again, I know a lot of people are going to have questions with the new administration and all that's to come. So guys, if you would like to meet with Jonathon for a completely free retirement planning consultation, go to marketadvisorygroup.com and just click book now.